What's up, YouTube? I made over $300 this week selling covered calls, and I wanted to show you guys how I did it. So, this is my wheel portfolio that I've been showing you guys for the last couple of weeks. I have Robinhood and Netflix as my main positions, and I've been selling covered calls to lower my cost basis here on Robinhood. But I got kind of adventurous this week, and I was selling covered calls in my other positions in my other portfolio. So, I want to share you guys how it went. So for this week, I'm sure you guys are pretty in tune with what's going on, but there's a big war going on in Iran, an oil crisis of sorts. They're talking about inflation being a little bit stickier than we predicted at first. The Fed is projected to cut rates twice this year, but now they're talking about even raising rates in July, and that's a big shot for the market. So there's a lot of stuff going on. Market's been going up and down. It's kind of trading sideways the last couple of months. If you guys have seen, I saw a big opportunity on Tuesday, March 18th. Whenever market opened, we were kind of ripping pretty high. We saw over 1% for the indices like the SPY and the Qs, and that's usually a pretty good day. So I decided I wanted to sell a couple of cover calls because I didn't think we're going to see those prices rising again just yet. I don't think there's anything bullish necessarily right now. And I honestly thought the market was kind of underreacting to the whole energy crisis happening in Iran. So this is what happened. We actually ended up trading down for the week, and I was able to capture a little bit of premium on my positions, including Robinhood. And let's go and do a little bit of deeper dive on the contract I sold. So if you guys are familiar, I have this position here in Robinhood on 84 basis, and it's actually quite a bit lower now because I've been selling covered calls on it, but currently valued at $7,270. But let's go down here so we can see our orders and what we did this week. So let's go to show more. So I bought my contract back on the 17th for $2 because I'm just trying to protect my downside. If Trump gets on Twitter on Friday, this was on Thursday, and he goes, "We're out of Iran, we're cutting rates, and we're doing mortgage buybacks," and all this kind of crazy stuff, which is very capable he could at any day. Prices can shoot up, and then I'm now underwater on my covered call. So I'm protecting my downside here by doing this. And as you can see, my $63 covered call that I sold with an 80 strike, and I'll show you guys on the Excel. It looks a little cleaner too. It is not necessarily showing the Greeks over here, but I sold this contract at pretty conservative delta. It was at around 20. So if you're familiar with the Greeks, every dollar that the stock moves, it's represented in the delta. So if Robinhood trades up a dollar and my delta is zero point 0.3, my contract's going to change up or down by zero point 0.3, right? So I sold this contract for 0.63 in premium, and then I ended up closing it out for $2. So that gave us a $61 premium gain for this week for Robinhood, right? When we talk about the other positions I was telling you guys about, so let's take a closer look at the Excel that I've been sharing with you guys on how I'm tracking my premiums. I actually added this row so it looks a little bit nicer here at the bottom, but I'm sure you guys are familiar with this right here. I was talking about my basis that's showing on Robinhood is $84.91, but that's actually not super accurate because I've been selling calls and making premium all throughout the last couple of weeks, and I've been sharing with you guys this as well. So go back a couple of videos, you'll find it where I'm making money even when the stock's trading down. So that's the beauty of the wheel strategy and selling cash secure puts and covered calls. You're able to capture a little bit of premium and lower your basis if you're doing this right. So our new basis, $81.58. As you can see here in my formula, I'm subtracting the premium that I've gone against my basis, and that gives a new basis of $81.58. So talking a little bit more about how I made over $300 this week selling covered calls and capturing that premium, I actually have positions in all four or all five of these stocks right here. As you can see, I have a leap on Meta, I have a leap on AMD and Amazon. I actually own shares of Google, and on my Meta, AMD, and Amazon, these leaps, they are contracts expiring 2 years from now, and they're deep in the money calls. So with leaps, I get exposure to these tickers and I can open a position in Meta, in AMD, in Amazon, and have more leverage than if I were to just buy with my cash and buy shares outright. So, for example, my Meta position, I have a 90 delta in that leap call that I have expiring 2 years from now, which is deep in the money. So, for every $1 the Meta goes up, 90 cents of my contract follows that. So, I get exposure to 90% of price action for Meta for a significantly lower cost than if I were to just buy 90 shares. So this gives me leverage. So I'm leveraged on AMD, Amazon, and Meta. AMD and Amazon have similar deltas compared to my Meta position, and we can do a deeper dive on those positions another day. But I wanted to share with you guys because I sold covered calls in all 5 of these tickers that I own. So that's why there's a little bit of a higher premium this week. I got a little bit brave and it kind of broke a couple of my rules. I told myself I wouldn't do covered calls anymore, but I just saw the opportunity and, we're doing the video and I was able to capture a little bit of premium. I was super conservative with the deltas for these over here. I was selling them at like 0.15, 0.18, 0.20, which is very, very low. A lot of people sell their covered calls at a 30 delta. So I'm happy with the results so far. This week I was able to capture, let's see, $374. Just only a couple of days that they were open. I closed them out on the 18th, I think it was, or 19th. So 3 days to make a couple of $100. I really didn't think the market was going to recover yet. I don't think we have any bullish news for us to shoot up more than 1 or 2% every week. There's a lot of war going on. Oil prices are going up. There's a couple of things going on with the Fed when it comes to cutting interest rates or even rising rates that they've been talking about now in July. So there's a lot of uncertainty. I didn't think the market was going to shoot up. We saw a big move on Monday. We saw the NASDAQ and the SPY shooting up over 1%. And I saw the opportunity and sold my covered calls against that. So I want to talk about how much I made relative to my capital. So this is important because you could have $1 million account and you're making $300, like, not much, right? So I want to share with you guys my basis on these positions. So let's check it out. So you've guys seen Robinhood. We've been talking about it for a couple of weeks. We're down to an 81.5 basis. In my Amazon Leap, my basis is 92. My AMD Leap is 153. My Google is 16.5. And my Meta is 324. This is actually not accurate. This is 165. So 165 times 100, right? So I own 100 shares of Google at a 165 basis. So this brings us to an 81,600. So I traded this week with $81,600 worth of capital and made $374 or $73 back. So what's our return? 0.4. So this is intra week. It's going to be a little bit lower. If I sold monthlies, for example, which I could have done, I think we could have seen maybe 1%, maybe 2% on a good day, but I'm happy with it. I'm just kind of dipping my toes again into doing covered calls. Maybe I'll do a couple of cash checker puts if I see a couple of opportunities, but this is our result for now. This brings us to $373 for the week, which I'm happy. The goal is just to lower my basis on all of these and capture a little bit of premium so we can have some cash whenever we see a good buying opportunity. So adding up the premium I've made this week with my 373 plus the premium we've made in the other episodes, that brings us to a grand total of $645 for premium collected on our covered calls. So not too bad. I came with a little bit more cash this week because I saw the opportunity. We'll see how next week looks. I certainly don't want to get assigned in any of these because these are my long positions that I'm holding for a year, year and a half, and I don't want to get rid of them right now. That's why I went pretty conservative with my deltas. But whenever I saw the opportunity, I couldn't skip on it. And I thought I'll bring this for you guys so you guys can have an understanding where a little bit more money came this week. So overall, pretty happy with these results. You guys might be new to the market and seeing a down market right now at the start of the year. A lot of conflict overseas. Inflation is a little bit sticky. The Fed is a little uncertain if they're going to cut rates or if they're going to even raise rates, which is kind of insane. There's a lot of stuff going on right now in the market, but be hopeful that it's going to come back. There's a lot of doom and gloom when times like these are around. But just like it happened last April with all of the whole tariff stuff, and that wasn't necessarily like a fundamental crash. It was just like a news crash, and those always recover pretty quick. If you look at a graph, it's a V recovery, just like COVID was. It's not necessarily a fundamental crash. This can be more of a fundamental correction where we're seeing rates not dropping as much as we wanted, and the market's reacting to that. So a lot of stuff to unfold. I appreciate you guys tuning in. These are our results for this week. I'll keep this Excel updated for us, and catch me next week for some more cover calls action and stock market stuff. I appreciate you taking the time. Don't forget to subscribe, and I want to see you guys win.